Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Monday, September 22nd, 2008. The dollar was weakened on Sunday and into Monday trading as traders and investors digested and weighed the implications to the greenback of the potential $700 billion bailout plan in which the government will buy the bad debt of U.S. financial institutions for the next 2 years. The government would also raise the nation's statutory limit on the national debt to $11.3 trillion from $10.6 trillion. Today's action saw the euro-dollar pair climb 300 pips from its open to test the 1.48 level during the New York afternoon session. Foreigners will look at the increased debt load of the U.S. and will be more reluctant to finance it at current prices. The euro, after falling during the latter half of the summer, has again regained its allure as a counterweight to the greenback in terms of being a reserve currency. The euro-dollar pair continued its rally since hitting 1.39 on September 11th. After Friday's euphoria in global stocks following the first details of the massive bailout plan, today's session saw stocks go up in Asia but down in Europe and the US. The dollar-yen pair, after receding late on Friday from the 108 level, continued falling after Sunday's open. For the session, it was down more than 100 pips, testing the 105.60 level. In afternoon trading, the Dow Jones Index was down more than 200 points, while the Nasdaq was off 56 points from its open. With the greenback losing its allure, investors put their money into commodities, oil, and gold, helping to boost Australian, New Zealand, and Canadian dollars. In this look at the Aussie-US dollar pair, we see a 200 pip swing from 0.83, which is where the pair was consolidating during Sunday's trading. That puts the Aussie about 700 pips higher since last Wednesday's low at 0.78. The NYMEX crude oil futures soared today, eyeing the $130 a barrel level, while gold is up more than $40 to trade around $900 per ounce. Turning to fundamental news now, the UK Rightmove House Price Index was down 1% for September, the fourth straight month of declines. However, the pace of the decrease was slower than seen the last month. September saw a record low number of properties coming onto the market. In Japan, the All-Industry Activity Index rose 0.8% for the month of July, reversing most of June's 0.9% decline. The index was boosted by a reversal in fortunes in the construction sector, which increased 1.3% on the month compared to the previous month's 1.1% fall. In Canada, retail sales rose a smaller than expected 0.1% as car sales fell 0.6% and the food and beverage category declined 0.3%. Excluding autos, sales were up 0.4%. For the most part, Canadian retail sales have been resilient when compared to the struggling economies of the US and the UK. We already mentioned how commodity currencies performed strongly today, and the loonie was no different, despite the lower than expected sales data. After climbing to test 1.05 in the aftermath of the release, the loonie fell 150 pips to trade below 1.0350 in afternoon trading. Tonight, New Zealand releases a measure of consumer sentiment. Overnight, Germany and the Eurozone released preliminary readings for manufacturing and services PMI. The Eurozone will also release its industrial new orders. Continuing overnight, the UK will reveal data on mortgage approvals and manufacturing activity. Tomorrow, Canada will post consumer prices, while the US reveals a government house price index and the Richmond Fed index. And that's it for this Monday edition of our broadcast. Thank you for joining us, and see you tomorrow right here at cmsfx.com.